So it's been 17 years with the IAIS. When I first started, I did not need to wear these. So let's get started. And I think, in the interest of time, I may skip the introductions because I think everyone on the stage is well known to this community. And let's get started with the first set of questions. And Shigeru, if I may start with you, and let's look back a little bit over the past 2 years. And it's been an interesting time to be chair. It's been a rapidly changing external environment, heightened geopolitical uncertainty. How has the IAS been able to continue to deliver on its mandate in this volatile time?
Thanks, Jonathan. I don't want to be repetitive, but I do think that currently what defines us is about the growing sort of speed and complexity and interdependence of various sectors, including the insurance sector. That is why we are here today, for example, so we can discuss about these external environments, of course, but to think about what would be the optimal collective response, because all the issues are global in nature right now, which requires a global response. And our external environment is much more challenging if you talk about geopolitical tensions, increasing frequency of extreme weather events, or the rapid evolution of digital innovation. There are multiple issues that, and opportunities actually, that we should discuss and about. So in that context, I think insurance plays a very unique role in promoting economic growth but also societal resilience. That is why in the strategic plan it refers specifically to the importance of societal resilience in a way that would promote and ensure that our economies grow in a medium to longer term perspective. Of course, IAIS is a very strong organization with over 200 jurisdictions, 90% of global insurance premium, also has very much of a diverse group, and I do believe the strength of the organization as the IAIS is exactly that, to have a diverse view, but at the same time being able to work together on a common objective. And I think that's the strength that has been become more evident and more important during these past several years. And I think we have shown that through our finalization of the ICS last year. Not only the finalization of the ICS, but also a productive outcome on the comparability assessment with the US AMA. Thanks to our American colleagues for that, and thank you for other members around the executive committee table that we were able to reach that result. And I think that the IAS will continue to be able to play that role and to be a key driver in ensuring and promoting the resilience of the society, but also to contribute to economic growth. Let me stop there. Thank you.
Thank you very much. And maybe, Toshi, I can turn to you next as the new EXCO chair. I'm sure audience will be interested to hear what do you see as the strategic priorities for the IAS over the next few years?
Okay, thank you very much, Jonathan. As I hear more and more from my predecessor, I took the job of IX co-chair in a very challenging time, really. So it is indeed a pivotal time for the global insurance sector and really challenging time for the IAIS. So I'm a little bit nervous about it, but I look forward to doing my job as well. So as Shigeru-san mentioned already, we are seeing a growing interconnectedness of the insurance kind of industry with the rest of the financial system, financial services industry. And we, IAIS, are very equipped to identify and monitor and address these challenges. And now we are further improving our abilities by way of changing the structure of the committees, as I mentioned earlier. So we have the strategic plan for 2025 to 2029, and this represents a strong foundation for the IAIS to tackle these challenges, emerging challenges. This plan reflects a shared vision and commitment among our membership to ensure that the insurance sector remains resilient and contribute to societal resilience. So it places a strong emphasis on implementation, practical guidance, and capacity building, and particularly for emerging markets and developing economies in a kind of inclusive manner. As new chair, I'm committed to advancing our work and ensuring that our collective efforts continue to deliver on IAIS mission. So there are 4 kind of key themes for the IAIS going forward. One is, of course, the ensuring the effective implementation of our global standards, ICS. And the second one is to further deepen our risk monitoring and assessment through the GME and other assessment activities, so that we can proactively identify and address emerging threats and opportunities. Third theme is supporting supervisors and the industry in responsible to emerging risks, like climate-related risks and risks arising from digitalization. And crucially, the fourth theme is further fostering international collaboration, because these risks do not respect borders, and our collective response must be coordinated and robust. So, welcome.
Thank you very much. So, I think lots of continuity there. And Petra, welcome. I turn to you as well. I touched on it a bit in my remarks, but around the importance of stakeholder engagement. Maybe you can, Petra, talk a little bit about how that shapes our priorities and advances our priorities. Thanks.
Yes, I'd love to do that, but I start with saying thank you for bringing us to Albania, Mimosa. It's a wonderful experience. It was lovely yesterday. It will continue to be that. And I just told my sisters that I would be on stage in a ballet theater now. They were laughing, but I will send them a picture and show them what we were doing today. So it's also good to see everyone in the room, because that is what it's about. It's about the engagement with my colleagues, but also with the stakeholders. And it's essential, and Toshi alluded to it. There's a lot happening in the world, and insurers are at the forefront of really new risks, also new opportunities, cross-border, cross-sectoral, trends that are happening that are changing the global risk landscape. And with that, they're changing potentially what you do, what insurers do, but also what supervisors do. And so at the IAIS, we're committed to setting the relevant priorities to empower supervisors to address these risks, but also to set and maintain implementable standards and supporting members with that implementation. And we do that evidence-based, inclusive, and collaborative. And what does that mean in practice? So it means we really start from data and data analysis, and that we can only do together with you. And the example is the GME, the Global Monitoring Exercise. And I'm really proud to say, and everyone here is proud, that we're covering 90% of premium written globally this year. So that's major. That really gives an idea to all of us where we are when it comes to the risks that we are facing. Now, once we have that, we see the risk also, and what we identified this year is geo-economic fragmentation, increased insurance investment in private credit, and insurers' adoption of artificial intelligence. And all these three are not just risks, they're also opportunities, but how do you balance that? And here we are doing analysis also in the context of the GMAR that then again also will benefit from your views, and later this week Dieter Hendricks, who's leading that work wonderfully, is going to discuss that with you, and we look forward to your insights as well. So we also look more in depth at really typical or topical subjects. And so AI is a big one, and I'm very happy that I can lead the work on AI application, where we try to work with supervisors together how to apply supervision of AIs, but we very much benefit then from all the feedback you gave on our application paper, and we made significant changes when we looked at the feedback. And I mean, I clearly remember then how I sit with the team and we look at what you drafted, why is that, what do we need to change? It's really instrumental in our work. So reaching out to stakeholders is core of what we do. The IAIS leadership, I got notes as well, but it was 130 engagements that happened in 1 year time, so I think that shows it as well. And we will continue to work with you to benefit of that. So please keep reaching out to make sure that we have the data to get to an analysis, that we then have the stakeholder input to understand that correctly, and that then in an inclusive way we try to get to harmonization and implementation in a way that's manageable for all of us.
Thank you very much, Ritra. And Andy, we know the life insurance sector is experiencing some fundamental shifts. How's the IAS staying abreast of this?
Thank you, and I just want to echo what Petra said first. I want to thank the Albanian authorities, Mimosa, the people of Albania. It's been wonderful to be here. It's my first time here, but I'm looking forward to coming back to checking out the beaches. And again, it's also great to see so many people here. A valuable part of what we do is listening to stakeholders. This is one community, and it is that interplay of thoughts and ideas that will help make us, as regulators, as supervisors, better. And that, in the end, helps the consumers we're all sworn to protect. Now, if we take a look at the life insurance sector, yes, it is undergoing profound structural changes, but I do think it's also important as we look at what is happening to look at the why. And the why is that capital equals capacity. We've got a tremendous need. There is a growing coverage gap. We have the need for the life products. We have the need for the long-term savings products. Now you combine that with what happened in the recent past. We had an extended period of low interest rates, in some cases negative interest rates. And we also had the public financing markets that were not necessarily open to life insurers. But rather than give up, what many life insurers did was to try to find alternative sources in order to fund their growth, in order to provide the products that consumers need, in order, essentially, to help close that coverage gap that we see and we worry about. Now, the IAIS, as Jonathan asked, what have we been doing? We've been monitoring these developments since at least 2020. You know, we've got people like Dieter and Peter in the front row sitting here, and they're going to tell you a lot more about it. But they have been monitoring it closely through the GMARs and the GMEs and all that, and the focus has been primarily on two interrelated trends. One is the increased allocation to alternative investments, and the other is the expanding use of asset-intensive reinsurance. And we know that life insurers are increasingly diversifying into the alternative investments, private credit, private equity, securitizations, infrastructure, and all that. And even though interest rates have risen somewhat from their lows, they're no longer negative rates, interest rates still are not at historically high levels. And we still have that push for the capacity. We still need to provide more coverage. So we see that drive towards diversification that will allow these companies to provide the products that they need. And at the same time, we are seeing a movement to transfer risk on the capital-intensive liabilities through leveraging the cross-border asset-intensive transactions, for instance, asset-intensive reinsurance. And they usually often align these strategies, I'd say, with alternative asset investments. And we know that reinsurers who specialize in asset-intensive reinsurance especially plan to do this. What have we been doing lately? You take a look at a market, certainly the private credit market, that was up in 2023 to $2.1 trillion, $2.1 trillion US dollars. There's a reason for that, again, and that was driven primarily by expansion in North America and Europe. But private credit does offer benefits. We've got diversification, we've got the downside protections, we've got illiquidity premiums, we've got stable long-term cash flows, and that will make it attractive to life insurers who have to address long-duration liabilities. But we also know that it presents different challenges: credit risk, liquidity issues, valuation uncertainty, and hidden leverage, which requires robust risk management and supervisory oversight. So we at IAIS have been conducting an in-depth analysis of the private credit market. The shifts that we've seen has increased the interconnections between life insurance and the broader, the non-bank financial intermediaries. And that, as we all know, has often coincided with a greater involvement of private equity players in the life insurance space. These trends can enhance returns, they can support long-term commitments, but the risks that they introduce, the valuation uncertainty, the illiquidity, which I previously mentioned, the greater interconnectedness, do deserve increased scrutiny, both at the level of individual jurisdictions and at the level of the IAIS. And at the IAIS, we've been monitoring these trends, as I mentioned, through the global monitoring exercise and the global insurance market reports, with a particular focus on their financial stability implications on the one hand, and supervisory responses on the other. And earlier this year, I think it was in March, we published a draft issues paper on the structural shifts, highlighting their supervisory significance. We've got feedback, and we thank you for all those who provided feedback. And at this week's meetings, we discussed a final paper, which will be published in the coming weeks. And just to give you a preview, I'm hoping I'm not jumping on Dieter's remarks yet. But the paper will acknowledge that these, while the developments can boost returns and long-term investments, they add complexity, opacity, and interconnectedness risk, and those are risks that the supervisors must address. Now, the good news, the draft paper concludes that the existing insurance core principles, the ICPs, broadly addresses these risks. There may be a need, as there always is, because regulation, supervision evolve. There may be a need to enhance supervisory guidance in particular areas: valuation, as I mentioned, liquidity management, transparencies. And as we keep working on this, we will issue application papers, new guidance, we will revise existing material. And beyond that, we're going to continue to strengthen monitoring and supervisory coordination, which includes refining the GME to better capture alternative asset and asset-intensive reinsurance exposures. We're going to analyze transmission channels and look for data gap. And when we do this, we are going to be working with a financial stability board, because as has been mentioned so often, this is all about facilitating cross-border supervisory cooperation. These are global trends that need to be addressed globally. Jonathan?
Thank you very much, Andy. And let's change track a little bit and turn a little bit more in internal focus and see the IAIS is pursuing an operational project focused on the outputs generated by the IAIS's work, so the papers, the assessment reports, the webinars, and so on that we produce, and asking how do members use them, how do they provide most value to members, and what changes might we make to further improve the value and the impact that they have. Maybe you can tell us a bit more about that.
Thank you, Jonathan. Before I respond to your question, let me also express my gratitude to the Albanian Authority for hosting us in beautiful Tirana, with a special words of thanks to my friend Mimosa. Now, regarding your question, the output review is an important internal project, giving us the space to reflect on how we work. We want to ensure our work remains relevant, impactful, and responsive to the needs of our members. We are committed to delivering high-quality, practical, and forward-looking outputs that address evolving challenges and promote effective and global consistent supervision. So when I say outputs, I'm talking about written and non-written outputs generated in delivery of the IAIS core objective that spans public report and paper that examine supervisory issues and provide guidance on effective supervisory practices. Public reports also setting out implementation assessment finding, but also members-only material like data dashboard, informational notes, webinars, training, regional seminar, and more. So far, we have done the research phase. The research has been substantial and involved workshops, interview, survey, data analysis. Many members' jurisdictions have contributed in one way or another to this process, and we thank them for doing so. Through this, we now have a better understanding what are the key challenges that arise for members when interacting with the IAIS outputs, and what might need to change to modernize our outputs and created, shared, and used with the ultimate goal for increasing their relevance, accessibility, and impact. The consideration of the finding is still in progress. It is too early for me to state conclusively what members and stakeholders will see in 2026 as implemented changes. So yesterday at the Executive Committee, we had an important discussion reflecting on the recommendation prepared by the consultant. Over the coming month, the details of our action plan will become more concrete, which changes, in which sequence, over which timeline. So I'm really excited about this work. Members and stakeholders can expect more communication next year about tangible changes.
Excellent. I'm excited to see that too, and I'm keen to get to the open Q&A section of the session. So I'm actually just going to ask two more questions before we do that. One to Petra and one to Andy. Petra, do you want to cover off the topic of artificial intelligence, which is AI, which is top of mind for a lot of supervisors, stakeholders. So we know the use of AI is steadily increasing across the global insurance sector. And what are some of the challenges and opportunities that we see for the sector and for supervisors? I know as chair of the FinTech Forum, the IAIS FinTech Forum, we've been doing a fair bit of work on this, so over to you on that.
Yes, thank you, Jonathan. And Albania is actually a wonderful place to discuss about AI. It's the first country, I think, globally that has a minister that is an AI, Diela. And AI is a woman in Albania. So, and she helps to do things in an organized and proper way. So I think that's a wonderful example of what AI can be. And it's definitely something that as an insurance industry, but also and supervisors, we need to look at. We need to do that ourselves. We see our industry use it. We need to supervise that. So the FinTech Forum 2 weeks ago had a wonderful meeting in person where we got together to further discuss how we work on this. As you all know, we already identified that we do feel that the insurance core principles of the IAIS are a sufficient base to start our supervision from, but we indeed have, and I referred to it before, we have also produced an application paper answering the question, how do I supervise this? And that's an important question for supervisors that on a daily basis more and more see AI being used. And we really see a trend from AI being used in the back office to create more efficiency, which is essential, to also the front office where it starts to serve customers, where it does complaint handling. And at least if I speak for my part of the world, where that is actually also much appreciated by consumers, that complaint handling is fast and easy. Yeah? You send a picture and you get your claims reimbursed. So that's really a benefit. But when it comes to underwriting and pricing risks, is that fair? Is it inclusive? Do I have the ability for redress? These are all very important questions. So it all comes down to fairness, to proper governance, to proper processes, and then to ask the question, can we supervise it? Now, here IAIS will move forward, the FinTech Forum will move forward. We are developing a question bank. Now, that really is a document and a bank for information for supervisors, where we will start sharing examples that we see and how we dealt with that. And in some areas, it's just easy because some of us already have seen it and they can advise the colleagues. And in some cases, we just run into the same questions. For example, third-party models. How do we work with that? And it's very helpful to have that dialogue. It's essential that we get your feedback on that as well. So going forward, the focus will be very much on further helping the implementation of supervision and the ability and of supervision in the individual jurisdictions, much more than we will be focusing on standard setting.
Excellent, thank you. And Andy, ICS implementation, and Shigeru touched on it, and great to see the continued strong commitment to implementation of the ICS across the globe. Can you tell us a bit more about an update on ICS implementation, particularly the ICS implementation assessment methodology? Thanks.
Sure. I think for the IIS, this year, 2025, has been a year of transition, moving from the standard setting, whether it's the ICS, ComFrame, and moving into implementation. We published the high-level principles for the development for the ICP implementation assessment methodology. Now, as we move to 2026, I think there will be a significant change in focus on implementation. We've discussed this week how to manage what is really a very ambitious implementation program, making sure the work is properly sequenced, properly supported. Early next year, the first half of next year, we're going to have baseline self-assessments by members of their implementation of the ICS, and the second half is going to be similar, but it will apply to ComFrame. So I will say, 2025 has been great in development. We've got the high-level principles, we've got the self-assessment questionnaires, we have implemented the we've initiated the development of a detailed methodology for assessing ICS implementation across jurisdictions. The methodology must be finalized before the assessments can commence, and the launch of that first full jurisdictional assessment is set for 2027. What this means is that the assessments will be conducted using a consistent methodology across jurisdictions, including for the assessment of implementation of the ICS in each jurisdiction and the aggregation method, which was the U.S. implementation. The final aggregation method will be the U.S. implementation of the ICS. And our aim is pretty basic. We want to ensure that the ICS delivers on its goals, on its objectives, which is to be a robust, comparable, and effective global capital standard. It has to enhance supervisory convergence and support financial stability worldwide. So looking at that, 25 we started, 27 will be the next big date, but I think 25 to 27, we will be very occupied. We will be devoting an awful lot of resources to that, both in our own jurisdictions and at the IAIS.
Thank you, excellent. Good, let's start with some questions from the audience. I'm looking around. I think some microphones have been distributed, so let's kick off. Bazena, I see you. Thank you.
Thank you. So should we be encouraging more use of AI and advanced tools in the insurance industry, so to help with market efficiency, advance the industry, better serve insurance customers? And if so, how could we make this a joint effort between the IAA and the IAIS? And have we seen any examples of this that we could build on?
I'll jump off with that. I know we've all been on panels talking about AI. And I'm going to give you my perspective from the US side, the way we've looked at AI. I don't think it's very different from the way my fellow supervisors look at AI. AI can be an extremely valuable tool. It can reduce friction within the system. It can enable insurance providers to provide products that are more effective, that are better targeted. So, they will serve consumers better. It can get to them easier. I mean, it's the difference between Amazon having to go cross country to buy something. It makes it so much easier when it's right in front of you. And the bottom line is, AI can be used to help close the coverage gap. All that being said, it is a tool. Like any other tool, we have to use guardrails. Insurance is a business of trust. We have to make sure, because we sit in lieu of the consumer, we have to make sure that the consumers understand that they're being treated fairly, that there are no issues with AI that are in some hidden box. We have to ensure that there is no unfair discrimination. And that is what we've tried to do, both at the IAIS and certainly nationally in the United States and in our individual jurisdictions. If you look at what the NAIC, the National Association of Insurance Commissioners, did last year, and we created a model bulletin, very principles-based, but it says these are the steps you have to follow. For me, there's got to be a clear governance structure. When you look at the use of AI, it's got to be fair. It's got to be accountable. It has to be compliant. It has to be transparent. It has to be safe and secure. You look at all that and you're thinking, yeah, it has to be pretty much like all the other stuff you do. You have to comply with the laws. You have to treat consumers fairly. And we are hoping that by doing it that way, we can stimulate the kind of innovation that will help provide products to consumers much more effectively, much more efficiently.
I want to just add something for AI, because it's not only about developed country, but also in emerging markets. We are touched with these changes, and this is very important also for the emerging market to address AI. If I take the example of Morocco, we started discussing with the industry regarding the AI impacts on how we can work with it in a positive way. So I wanted just to share that also in EMD market there is an interest on AI.
If I may, and then maybe to go to your question, should we then as a supervisory community encourage the industry to use it? Because I think that's what you asked. I would say AI, innovation, new technology, that is there for also the industry to benefit from and to use. And the focus of the supervisor should be, and I fully agree with what Annie just said, in not treating it any differently than other tools that are used, and focusing on the consumer. And is it really benefiting the consumer? So encouraging industry to make use of this technology to better serve, to reach more consumers, to be more consumer-centric. That will be great, and there I see a role. But beyond that, I do think that is something for industry to do, and then where we do need to encourage, where we do need to work together, is the subtech. So that's where we ourselves make use of the new technologies to supervise, and how can we strengthen each other there to help do that, be it on getting data, assessing the quality of data, assessing reporting that we get, building dashboards to use, building the right triggers to act. This is the subtech space where we really can work together, and that for sure we need to encourage. So first it's consumers, then it's supervisors, and meanwhile, I mean, the industry, of course, can also enjoy the use of AI, and we will supervise that as we always have.
I would just want to emphasize the kind of importance of, close exchange of views and collaboration between the private sector and the supervisor in this aspect. Because of the rapidly evolving technologies such as AI, and in order for us to catch up with these sort of development, we do need the continued dialogue with the private sector. So in terms of the use cases and how they manage their risk themselves, and that is the information we really need. And at the same time, as a prudential supervisor, we need to, pay close attention to the emerging risks coming from use of AI, which may be common across the, advanced technologies and digital technology, but some of them could be unique to AI. So we need to closely monitor these sort of emerging risks. So in this case, let me introduce some efforts by Japan FSA. We set out a kind of discussion paper with respect to the use and the possible risks of AI, and we are now holding a sort of private sector, private public kind of dialogue forum in order to share the information and kind of issues together. With respect to the use of AI, both at the industry and from the supervisors.
Excellent, thanks very much. And I think lots of conversations on this to come. Philippe, I want to invite Philippe from the IIF. I'm not sure where the microphone has gone now. It's on its way. It says collaboration in action.
Thank you very much. Philippe Breuil with the IAIF. Pleasure to be with you. Big congratulations to the new chair and big thanks to the outgoing chair. I have actually two questions related to NBFI, which is very high on the regulatory agenda. The first one is a bit following your comments, Commissioner Mais, about this interface between the expectation of the policymakers when they're looking for more private capital to be going to the private sector and the real economy and the regulatory concerns. And my first question would be, how do you reconcile in your engagement with policymakers their expectation and policy objectives, right? Going into the real economy and more private capital mobilization versus the regulatory concerns we hear from FSB and other, standard setters. So your dialogue there, that would be great to hear. And the second question is about the scope and definition of NBFI, right? It includes a lot of different players, different risk profile and regulatory regimes, including insurance. You've done a tremendous effort in your dialogue with the FSB. Nevertheless, the definition remains NBFI. And it would be great to see, this definition of an NBFI coming back. It was at the beginning of the thinking. And my second question is, how do you engage with the FSB to make sure that we're not going to be subject to XCC requirements and the specificities of insurance will be well recognized within NBFI? Thanks.
Thank you, Philippe. Let me take that question, if I may. Being a member of the FSB, I think I can share some of the perspectives on the NBFI issues. First, you mentioned about, there's a lot of discussion about regulatory modernization right now at the FSB. And this is an ongoing conversation, I think. And it is quite clear that American regulators and supervisors are interested, keen to discuss this idea. And if you look at in a global context, it's not just the US who is looking into this from a certain perspective. You can see the same in the UK, you can see the same in continental Europe. And as far as Japan is concerned, we have been an advocate of trying to look at financial stability, but also to look at the sort of a societal role of finance in trying to provide financing in order to promote growth. So that has been on our agenda for the past 2 decades. It's in the FSA's mandate. We were a very strong advocate when everyone was piling up regulation and say, look, you have to think about whether this overkills the economy or not. That was our position. So for us, it's a very natural sort of topic, but I can say that it's become a sort of a global, how do we look at this? And it's an ongoing conversation. Nothing definite has been decided on this, but it's an ongoing, very interesting, I would say, conversation on that front. On NBFI in general, FSA Japan is an integrated regulator, so we look at banking, securities, we look at insurance, so we have a holistic perspective on this. I happen to be a vice chair at IOSCO, and was a chair of the IAIS until Toshi took over. So I was sort of a non-bank person in that regard. So I do have a lot of conversation with banking regulators on this issue. And you are right. I think that we cannot sort of generalize what NBFI is. We have to look at who the entities are, and the entities themselves have unique characteristics, including its business model, how it operates, and what kind of risk it may pose, and what kind of opportunities or benefits it can bring. So my sort of always view was that you have to look to the entities, but also the activities of what they do. You can't generalize NBFI and say, okay, NBFI is something that's dangerous. That's not how the discussion should be, and I think that's broadly understood in the FSB community as well. But it's always very important to feed in an insurance perspective in the Financial Stability Board discussion. You cannot hide away. You cannot say, no, we're not risky. We have to be straightforward, and we have to sort of have a conversation straight on this one. And that is sort of, that makes all the people around the table at the FSB, who many of them are banking regulators, so they're not really, they know banks, but not insurance sometimes. So it's very important to have a straightforward discussion with the FSB on this. And I think it's going into that direction, even if you look at data collection, even if you look at how the risks are sort of, could emerge in certain parts of the NBFI. I think it's become a more practical, I would say, discussion.
Okay, I'm going to give a chance to some at the back of the hall as well.
Thank you, Bashir. I am the Vice President of GIFIA. So GFIA welcomes the IAIS focus on protection gap, including its joint work with the World Bank, and would like to understand how these findings will be translated into concrete actions in the IAIS future roadmap and work program, particularly with regard to climate-related NatCat risk. In addition, protection gap associated with longevity and morbidity risk are a significant and growing issue. How is the IAIS addressing this protection gap in a manner that both expand access to affordable coverage for aging populations and ensures the availability of adequate capital for insurers to provide their solution on a sustainable basis? Thank you.
Shall I ask maybe Shigeru? I know you have been a great champion around the work on the NatCat protection gaps, but I'd also like to invite Andy to come in as well, because I know this has been a big focus for the NEIC as well.
Okay, thank you. So I'm a little bit hesitant to talk, but let me, in the capacity of former chair. But yes, I think the work with the World Bank, I just mentioned in my opening remarks that there was a good policy discussion at G20 in July among central bank governors, finance ministers and central bank governors. We are working with the World Bank on putting together practical resources that would be beneficial for, particularly for emerging market economies to look at, because many of the emerging economies, market economies do, and also advanced economies, suffer from NatCat and suffer from protection gaps. So we'll try to put together some practical resources that they can look and see whether it fits into their sort of agenda, how does it fit in their policy, how does it fit in all the development assistance that's provided to these economies and so forth. So we think that would be quite beneficial. We hope that we will be able to put together this early next year, perhaps. So there will be development on this front. One thing to note that this is not there's no single silver bullet to this. It's not across the board. It's a country by country basis. So we can't say, oh, this is what you should do. That's not possible because the circumstances are quite different in terms of development of the insurance market, how much fiscal space you have to deal with it, how much understanding is there on insurance among retail policyholders and so forth. So there's a lot of things that probably countries should look into when they think about how they could address protection gaps. So that's one thing that I want to mention. I think there was a mention about pension and healthcare, and I do note that this could be relevant in some of the jurisdictions within the global community, and I do note that. One thing that must be careful about this one is that it's compared to NatCat, pension, healthcare is at the heart of social security regime in terms of how do you think about public pension, how do you think about private pension, what are the roles of public, what are the roles of private, and this, I talked about divergence in NatCat, and that's there. But if you look in the world of healthcare and pension, you have to really think whether this can be a productive or constructive discussion in a global basis. That's where things we need to think through about whether this would be a possible potential topic for the IAIS. Because if you look at advanced economies, look at emerging market economies, and think about it. Is this something that we can work on a global basis? So that's the point that needs a little bit more careful deliberation within the IAIS community.
And part of the reason for the IAIS is to provide support for its members and information across jurisdictions. And we have a climate risk steering group that's been doing just that. It's been working through this year and probably will be into early next year to look at different metrics that we may want to add as we look at climate risk. It's also been looking to see how insurers are using NatCat models. That clearly we all know that the weather 10 years ago is not necessarily predictive of the weather 10 years from now. We can't rely on past models. We need to use these new high-tech predictive models in order to get an accurate measure of the risk and thus of pricing. And we need to make sure that we as regulators understand these models, understand what these models are saying, understand how best to use those models. So the Climate Risk Steering Group is working on those two work streams, and that will help support us internationally. If you look at national work, there are innovative products if you go all the way through different areas of the world. Certainly in Morocco, they've got an incredible public-private partnership that's been designed to reduce that NatCat gap for those least able to afford to address it. That's part of the way that I look at it. It is going to require a holistic solution to address the NatCat gap, the coverage gap. In the US last year, the NAIC, we released our first climate risk and resiliency strategy handbook. And we are focused on resiliency. There are a number of measures that we've introduced to say that, this is how we can't reduce climate risk, but we can reduce the impact. We can make sure that homeowners, that businesses, that communities are able to make the investments that make them more resilient. So if something happens, the loss is less, the recovery is faster. And that's what we've been doing largely. We've been doing it in a number of ways. I'm going to take a shortcut here, do a commercial. If you go to ct.gov, we have a whole flood information center, and we have a report that came up from our climate risk and severe weather risk and advisory council. And it does list an awful lot of what's being done throughout various states. There is such cooperation between the states because we know this is a risk we all share. Now, the way the risk manifests may be different. It may be wildfires in California. It may be floods in Florida. It may be pluvial flooding in Connecticut. But it is still being influenced by the same factors, and we all still have to work together to figure out, again, how to measure that risk and how to mitigate that risk. What we look at, certainly with the insurance industry, but also the rest of government as a whole, is that we move from simple risk transference to risk mitigation, just as we did with cyber, for instance. Until we take the steps that are necessary to create a more resilient society, we're kind of moving stuff around on the deck of the Titanic. We have to do all we can do to ensure that our societies are as resilient as possible. And we think there is a significant role for us as regulators and for insurers. And certainly, I can tell you in my state, the insurers are an integral part of this, to come together to work to address these risks, to create standards and incentives to mitigate them.
Excellent. I think we have time for one or two more questions, but Yoshi, I know you've been
Thank you.
you've been keen.
Hello, good morning, Yoshikawa, or now OECD and GIP. Just as a sort of former Jonathan's predecessor for 15 years, and also all the IAIS histories knows from the beginning. Just I want to make one comment and one question. One comment, when IAIS started 30-some years ago, Basel Committee is 20 years ahead of us. We are always following Basel Committee's standard setting, international coordination, and we are always following the huge, big shoulder following. And now, last few years, I really appreciate huge transformation of IAIS. And Shigeru, you are the last time that now you are officially present to the IAIS. And I just really recognize what you have done. Definitely, we transform IAIS. We always regarded insurance as a little brother of banking. International community FSB, wherever we are always no voice, or at least we are not, our voice is not to be heard. But last few years, G20, G7, World Bank, IMF, people hear what insurance is. I'm really proud that the IAIS is now highly sort of recognized internationally policymakers body. And I really appreciate what Shigeru, you have done for the IAS. Definitely, we are in the different stage, and hopefully, I hope that we keep momentum as an insurance sector. We are fundamental sector for financial stability and also people's happiness. And I really appreciate what Shigeru does. Of course, it's not only you, but without you, it's not happened. So I really appreciate what you have done. And my question is, assuming now you are very relaxed and happy, but my question to you is, if you, particularly your case, is shorter than our predecessor, like, or Vicky or Peter Braumiller, if you could continue, you might not want to continue for next 1 or 2 terms, or so on. What do you wanted to achieve?
Now, in a Japanese diet, I would say I do not answer hypothetical questions.
But I hope that, because now you're taking off your hat of EXCO, so you could say your frank personal view. You don't have to have any obligation.
Okay, if you insist. Well, I think the question is actually for Toshi,
continuity.
But just as a prelude, perhaps, yes, I do think, what Yoshi-san, you mentioned is important and I think I answered to Philip's question as well on this one, is to make people aware and understand the value of insurance. For me, for example, insurance is, if you just look at the balance sheet of insurance firms, right? The liability side, we can always say, we are contributing for people to be prepared for risks. But if you also look at the asset side, there's a lot of things that the insurance sector contributes as a long-term investor. So in a way, the insurance sector balance sheet contributes to societal resilience, not only on the liability side, but the asset side. And that, I think, is the uniqueness of insurance. And also what I want to emphasize and have a better understanding among financial sector regulators is that contribution to societal resilience is inherently embedded in the business of insurance. If you have a more resilient home, the premiums will get less. That's because you do a risk-based business. Is it the same in other parts of the financial sector? Maybe some could argue it is, but some may say, no, there could be some differences. Think about this. So, for me, if I was to continue, and I'm not putting this as a message to Toshiyuki, it's just my personal observation, is that I think it would be always important to highlight that point. And that is that would be where regulators and supervisors and the industry can actually work together. We have a common goal. Of course, sometimes the relationship, sometimes frequently maybe, could be tense. I don't deny that. But there are always parts that we can work together. And that is sort of what I would have liked to do. But I'm off right now. So, but I'll stop there, but I'll turn it over to Toshiyuki-san.
So, Shigeru-san said at the beginning, I think in his remarks, that I represent three C's, and one of which was continuity. So, as a kind of continuity chair, perhaps my top priority would be to follow up and finish the kind of work and the Shigeru-san has done in terms of implementing the ICS while looking at emerging risks. And in that sense, since the insurance sector has become more and more integrated and interconnected with the rest of the financial system, I think by looking at these sort of risks and mapping the sort of interconnectedness and emphasizing the presence of the insurance sector in the global financial system, that would be very important. And by looking at emerging risks, perhaps there may be some issues for the IAIS to tackle. One possibility might be digitalization, and another could be how the private credit and private finance could affect the insurance sector. But let's see. So by strengthening our kind of ability to analyze and assess the emerging sort of development would be another thing. And so, as a continuity candidate, I'm really committed to doing this sort of work. Thank you.
Petra.
Can I? So, when you listen to this, what I think is one other thing that we need to be ready for as a community, as an insurance community, because here we are in the same boat. We are becoming more visible for all the good reasons that Shigeru said, and that comes with something. Yeah? So let's be honest. When I talk to stakeholders, they never walk into the room and say, "Hi, Petra, I work for a non-bank." They always say that they work for an insurer, but still people see us as a non-bank. We're outside of the broader community, which is the banks. But we want to play with the big guys, don't we? We're proud that we're in the G20 for good reasons. Where we're seen in the FSB, we hear the voice of insurance, and that's really to the credit of Shigeru to get us there. But once you're in there, then they will talk about you. And then they will publish papers about you, and they will have opinions about you. And this is where it really starts to matter that we are there, that we have our, not only analysis and our opinion of who we are, but that we bring that in the right fora, in the right way. And you said it at the start, Shigeru, you have a straightforward discussion on what we are not, where the risks are, where they are not. But if you want to play with the big guys, you need to be there. And I think the one cannot come without the other. So it might sometimes feel a bit discomfort, but I think this is the new reality as well. And I think with all the experience that our new chair, Toshi, has in this arena, I think we're well set for the next phase.